BlackRock running for the hills, a flight to quality, cryptocurrency, the tides have changed like that. In today's video, I'm going to break down how President Biden didn't even know where our inflation was at when he came into the presidency, and his economic advisor doesn't even know how the system works. And I'm also going to show you how some of the biggest CEOs are leaving their jobs, and the CEO of Bass Pro Shop warned Americans that inflation is here to stay. We're going to break that down in today's video. On the back end of this video, I break down exactly what I'm doing because there's a silver lining to this. During these economic times, the most wealth is built. Let's dive right into this. Okay, so the first thing I'm going to show you is a video where President Biden responds to questions about 30% rise in grocery prices due to inflation. Now, the one thing that we're going to look at first is this video, and then I'm going to break down on the back end. I'm going to show you how many restaurants are closing and how many CEOs are leaving their post. Now, the silver lining, there really is no silver lining, I guess. But the only thing is, we are here in a wave of energy that is going to change for the next 100 years. Your financial system, the way money is done, the way the economics policies are measured. We have a brand new asset class coming in where the Main Street gets a piece of Wall Street. So let's first listen to this, and then we'll dive into the facts, figures, numbers, logic.
Of course, it is by far the most important issue for voters. It's also true right now, Mr. President, that voters by a wide margin trust Trump more on the economy. They say that in polls. And part of the reason for that may be the numbers. And you're aware of many of these, of course. The cost of buying a home in the United States is double what it was when you look at your monthly costs from before the pandemic. Real income, when you account for inflation, is actually down since you took office. Economic growth last week, far short of expectations. Consumer confidence, maybe no surprise, is near a 2-year low. With less than 6 months to go to Election Day, are you worried that you're running out of time to turn that around?
We've already turned it around. Look at the Michigan survey. For 65% of American people think they're in good shape economically. They think the nation's not in good shape.
Comment down below. How do you feel about the economy right now?
They're personally in good shape. The polling data has been wrong all along. You know, how many you guys do a poll at CNN? How many folks you have to call to get one response? The idea that we're in a situation where things are so bad, the folks that, we've created more jobs. We're in a situation where people have access to good paying jobs. And the last I saw, the combination of the inflation, the cost of inflation, all those things, that's really worrisome to people with good reason. That's why I'm working very hard to bring the cost of rentals down, to increase the number of homes that are available. But let me say it this way. When I started this administration, people were saying there's going to be a collapse of the economy. We have the strongest economy in the world. Let me say it again, in the world.
Although GDP last week was far short of expectations.
Oh, it wasn't. Look, GDP is still growing. Look at the response of the markets. Overwhelmingly positive.
Yeah, overvalued, not overwhelmingly positive, overvalued.
Overwhelmingly positive. And one of the reasons why people feel good about it not being as strong as it was before is they believe that the Fed's going to respond.
They hope they're going to get a rate cut.
Yeah. Well, no president's had the run we've had in terms of creating jobs and bringing down inflation. It was 9% when I came to office.
Okay, there you go, guys. It was 9%. No, it wasn't. It was 1.9% when you came into office. 1.9%. Okay, so I want you to listen to this. This is his economic advisor. Okay, this is Jared Bernstein. We're going to listen to this short clip right here. He's talking about inflation, and then I'm going to have you listen to him explain how the American economy works.
So look, I think underlying the economy is still as strong as ever. The job market continues to put out great numbers. I don't know if you noticed the initial claims that got a little bit buried on Thursday. I think it was 207,000. I mean, that is a really solid job market number. When it comes to inflation, I think the question there, we should get into it if you want, which is are the forces that helped with the disinflation in the second half of this year, are they just on a break or are they gone? And obviously, we've argued that they are that they're still there and that we expect inflation to continue a bumpy path down towards target.
Okay, so a bumpy path down towards target. He thinks the economy is doing well. But let's see what he understands about the economy. So this was 3 weeks ago. This is Biden's economic advisor explaining how money works.
the U.S. government can't go bankrupt because we can print our own money.
Oh, cool.
It obviously begs the question, why exactly are we borrowing in a currency that we print ourselves? I'm waiting for someone to stand up and say, why do we borrow our own currency in the first place?
Like you said, they print the dollar. So why does the government even
This is Biden's economic advisor, just to be clear.
borrow?
Well, I mean, again, some of this stuff gets, some of the language that some of the language and concepts are just confusing. I mean, the government definitely prints money, and it definitely lends that money, which is why the government definitely prints money, and then it lends that money by selling bonds. Is that what they do?
Yes, that's what they do, my friend.
They
print money, they buy bonds, and then they sell the bonds. And then when we put our money into a bank, they lend our money out. All the money's dead.
they sell bonds. Yeah, they sell bonds, right? Because they sell bonds and people buy the bonds and lend them the money. Yeah. So a lot of times, at least to my ear with MMT, the language and the concepts can be kind of unnecessarily confusing, but there is no question that the government prints money.
No question.
And then it uses that money to
What?
yeah, I guess I can't really talk. I don't get it. I don't know what they're talking about. Like, because it's like the government clearly prints money. It does it all the time, and it clearly borrows. Otherwise, we wouldn't be having this debt and deficit conversation. So I don't think there's anything confusing there.
Yeah, it's not confusing. You guys print to create bonds, to sell those bonds as debt. Like, you guys can just print money when you're bankrupt. We can't. But that's why we're in this position. And they're both saying the economy's in great shape. So Janet Yellen warns higher outlook for rates will make it harder to keep deficit and debt expenses under control. So this is where the narrative comes in. Will they lower rates in September? If they do, your crypto is going to go through the roof. This is why BlackRock is running for the hills, guys. This is why BlackRock is running for a flight to quality. BlackRock was tapped to balance out the Federal Reserve after the collapse from 2006 to 2008. They were tapped by the Federal Reserve in 2020, and they know stuff that we don't know. Okay, so Bass Pro Shop CEO says brands will focus on affordability amid rising costs. Inflation is here. If Japan and China start dumping treasuries, we're going to go into hyperinflation. Okay, so I want to show you my mind mapping here. So these are all the restaurants in 2024 that are closing locations. Cracker Barrel, Applebee's, TGI Friday, Denny's, Boston Market, Mod Pizza, PDQ, Outback Steakhouse, Red Lobster, Burger King, KFC, Wednesday's, Hardee's, Blooming's, Chili's, Pizza Hut, Popeyes. I think Chili's is closing all of them. Popeyes, Jack in the Box, Subway, Dunkin' Donuts, Quiznos, Checkers and Rallies, Ruby Tuesdays, Fuddruckers are closing all their locations. Perkins, Golden Corral, Friendly's, Qdoba, Carl's Jr., and Steak and Shake. These are all middle-class restaurants. The middle-class jobs. These are all the middle class. They keep telling you the economy's great. Guys, every person that loses their job when they close these restaurants causes a ripple effect. Remember, every single dollar is debt. If they can't service their debt, that hurts the banks. It's a ripple effect. These are the notable CEO resignations from 2020 to 2024. If you choose to pause, this is how I do my mind mapping. This is how I do my research. I'm just starting to show you guys a little bit about that. But these are all the CEOs that are leaving their post from 2020 to 2024. A lot of bank CEOs are bailing out. They're like, I'm out, I'm getting out, I'm cashing out, I'm heading to the hills. Dollar Tree is closing 600 Family Dollar stores in 2024. Okay, 600 locations. The whole system is changing, family. The whole system is changing. So that's why I've been sounding the alarm since 2020. That's why I invested a speculative asset called crypto. And that's why I have an exit plan, because nothing moves in a straight line. Nothing. So that's why they were so against cryptocurrency, because Main Street got an access to Wall Street. It's an initial coin offering, like an IPO, initial public offering. So with initial public offering, you have to be an accredited investor to get in before it IPOs. With cryptocurrency, we were getting in before these companies expanded, right? So you're getting in at a very low cost, which it created extreme amount of volatility in the crypto markets and unregulated market. First, they resist it, then they sue it, then they regulate it, then they join it. We're in regulation and joining phase. We're about to go on the biggest bull run in history on the back end of this month. Some people are saying September, October, November. If they lower interest rates in September before the election, crypto stocks are going to go through the roof. The market is completely overvalued, specifically the stock market. Look at Warren Buffett indicator. And you're going to see what goes up comes down very, very hard. We have a World War III narrative, a climate change narrative, a social geopolitical narrative, and a financial narrative. So what I've done is I've inverted everything. I do the opposite of the 99%. As everybody's flooding in at the top, I'm selling on the way up. As everything collapses down, I buy the dips, I buy the bottom. And I follow this, the risk pyramid. I pull my profits from crypto. I'm holding 50% long-term. I pull it down the risk pyramid to tier 1 capital. I use insurance. I use insurance-based products to insure my wealth. Okay, I max fund my policies, and then I look at my businesses, innovations, technology, attention, and education. I look how I can create more cash flow. And I'm going to be getting into real estate now, multifamily. We're going to continue to stack silver, and then we're using Bitcoin as our gold. That's my exact strategy, right? So if you need support on understanding how I insure my wealth, you can fill out a needs assessment by clicking my bio. Just fill out the needs assessment, or down below in this YouTube video, you can click a needs assessment, okay? So I want to share this with the public. It's time to really go through the 5P framework, guys. Number one, you need to understand how to rewire the foundation. We were indoctrinated to trade time for money. You have to start thinking about money as freeing up time. And you do that through investing, through creating cash generating assets, getting on the right side of the cash flow quadrant. Number two is you need to create financial literacy. You need to understand what money is. They don't even understand what money is. That's Biden's economic advisor. I can explain better than he can on what money is. Yes, they print money to create bonds to sell you debt. They monetize debt. When big companies are in trouble, they buy junk bonds, they package it up, and they sell it back to us. It's just a vicious process, and there's no money in the system now, okay? Financial literacy is understanding how banks work. Bank makes money in 3 ways: interest income, fee income, and capital markets income. So I take my money and I operate like a bank. I go make interest income, I go make fee income, and I put my money in the capital markets because the bank is going to do that with my money anyways. Then you have financial discipline. You look at your income and your expenses. You try to reduce your expenses and increase your income. The gap, you don't go buy new houses and new cars. You take that gap and you learn how to invest. You get education on investing and different platforms you can put into. You take sovereignty of your wealth and you become your own financial advisor. And you start to understand how money works. And then from there, you grow your money, multiply it, repeat the process, and then you protect it with a trust or a will, right? A trust would be the best thing to do. We have to understand how money works, family. It's so important. It's unbelievably critical right now. So I hope this information reaches you well. I love you guys. I appreciate you. Tons of resources in my bio here on social media, TikTok, Instagram, or Twitter, wherever you're watching this, or in the description of this video. I love you guys. I appreciate you. As we always say, warriors, rise, get your shit together. Love you guys.